Hey, everybody's got to eat. And thanks to Archer Daniels Midland, they produce a lot of food for people to consume here in the United States. This company, I've been an investor just less than a year, and it was in my search for a good food company that I think is a good investment. And it really is to diversify away from these big tech stocks. I love my big tech stocks. They grow like crazy when times are good, but they also have bad years like in 2022. ADM provides a nice, consistent growth rate, dividend, and a lot of things that I find desirable. My name is Victor. Have an MBA. I have a lot of business experience, and I like to analyze the companies that I consider investing in. And I like to share that analysis on YouTube. Let me tell you more about ADM. I like to scorecard all my investments. I take a company through 4 questions and arrive at a decision whether I should buy more shares, hold, or sell my shares. First, do I understand the company? Do I understand what they do? Can I make a good decision on whether the company is a good company or a bad one? Is the industry an industry I want to be a part of? Do they have good barriers of entry into that industry? Are they an industry that's going to be valuable for the long haul? Is the company management team doing a great job? Is debt under control and less than 3 times EBITDA? And I want to discount the stock. The goal of investing for me is to see my stock price go up over time, and therefore it appreciates. It makes me money. Based on those questions and the answers to those questions, I decide whether I'm going to buy more shares, hold, or sell. The story on ADM is one of great history. They've been connected to farmers and growers for many, many decades, and they've been bringing food to market. They've been a commodity partner with a lot of these farmers. So they've been in this business for a long time. I like their consistent performance. As I look at their financials, they're a consistent company. They have low risk, a really strong balance sheet. So I like their story. With regard to the industry, this is an industry that's always going to be around. We need food, and there's no substitute. We need, in many ways, healthy food, vegetables and all that type of thing. And, ADM also grows a lot of the food that they feed to cattle, hogs, chickens, and so forth. So they are part of a very important supply chain, which is the food supply chain here in the United States. ADM announced their earnings today, so I have some fresh data to work with and reevaluate the company and see if they're priced at a discount or at a premium. Let me look at history first. Over the last 4 years, they've grown their revenue really nicely from 64 billion up to 101 billion dollars in revenue. And if you look at that collectively, it's about a 58% growth. So it's good to see the companies really growing well over the long haul. We saw a big jump up in 2021 when we saw inflation in food really kick in. So it just jumped up. And you could see that the pricing on food is here to stay. So their revenue just got really a big benefit out of inflation. Looking at the current year, their revenues are somewhat flat compared to last year. And, both for the second quarter of 2023 and the first full half of 2023, it's relatively flat compared to 2022. They are profitable. That's what I like about ADM, consistently profitable. So the market liked what they announced today. They exceeded expectations when it came to their earnings per share. They reported at $1.89 per share. So the market really liked that. I believe the stock's up 2.5%. The company, their PE historically is 14.35. They've come down on that. Their stock price did go up significantly, I would say, in the mid 2022 timeframe. And that's because, again, their revenue just jumped, but their stocks really come down. And that PE, I'm going to use about a 14, probably this number for a PE in my evaluation. They pay a 2.17% dividend. That's not going to break any records, but it's a nice dividend to have. And they can more than afford that dividend at 23% is their sustainability, their payout ratio. ADM's balance sheet's really solid. They have debt of $3.1 billion and they produce EBITDA of $4.4 billion. So they can more than pay all the debt just with EBITDA in less than 1 year. Their statement of cash flows, they have positive cash flow from operations at $3.4 billion. It is a drop, and I'm looking at full year because they haven't released their cash flows for the current quarter. But last year they saw their cash flows come down from 2021, which was a real bumper year, down to $3.4 billion. And if you look at the difference in those 2 years, it is about a 59% drop. And it's mainly because the pricing just got so high in 2021. This company was able to really just rake in a lot of cash. But the 2022 year, I think, is more representative of where they're going to operate. So I'm going to use that number. If you net out the cash from operations and you take out the capital expenditures, which were 1.3 billion, you get to a net of 2.16 billion, which is going to be the run rate that I'm going to use. I'm going to value ADM by discounting the cash flows I expect the company to produce in the future. I'm also going to value them based on their earnings per share value. Let's handle the free cash flow method first. So as mentioned, I'm going to use 2022 as a run rate, but I'm going to go down a little bit. I'm going to multiply it times 0.85 just to take some of that cash flow away and start with a more conservative starting point. That would be at $1.8 billion as a starting point. I'm going to grow the next 3 years at 10%. And then after that, I'm going to grow at 4%. Based on those growth rates, we get a terminal value of all cash flows in the future of $63.5 billion. And you combine all those free cash flows together, discount by 8%, which is the discount rate or weighted average cost of capital. And I get a current value of all those cash flows of $50 billion. I'm going to add the cash on the balance sheet and take away the debt. And I get to an equity value of $56.6 billion. Their market cap is $47 billion. So they're offering up, based on the cash flow method of valuing the company, about a discount of 22%. Their earnings per share just came in. Again, they exceeded expectations on EPS. I'm going to use the PE ratio that they have historically had with a 4% growth rate. And I get a value based on earnings per share of $95.37 per share, but today they're trading at $85. So the earnings per share method offers up a 12% discount. I combine the two, putting more weight on free cash flows, and I get a discount available on ADM of 19%. The stock price for ADM in 2023 hasn't been doing so great. It's down 5%, but what is down, is not bad news. It's actually great news, because if you would have bought ADM just less than 2 months ago, you'd be up 20%. And that's because this is a quality company. It got, kind of forgotten about, because we had, like Meta going up like 3x. You had Microsoft just going into the stratosphere, NVIDIA just taking all the attention. Well, this company was sitting right there. And it's a really nice contrarian way of diversifying. So this company continues to go up. I think they're up 2.5% today. And over the last 2 months, they've just been really performing. So I'm glad that I was buying into ADM when nobody really wanted anything to do with this company. So let me revisit ADM and scorecard the company. Do I want to be a part owner in the company? Do I want to be part of this industry? Yes. I think the company has a lot of barriers of entry. They have great credibility within the farming community, in the food supply chain industry. And this industry is here. It's here for good. We're going to need food. We're going to need more of it. Our population's growing. They also export a lot of the food outside of the United States. So it's a real solid industry, and it's a company I want to be a part owner in. Their operations are very well run. Management team gets an A+ from me. Their debt is less than 1 if you compare debt to EBITDA. So excellent balance sheet. You get a tiny discount, and I don't think a discount is big enough for me to buy just, into the company at the current price. I'll wait for the price to pull down. If the price continues to go up, I'm just going to hold tight until either their financials get better, and I think the company's worth more, and therefore the stock price is worth more, or I'm just going to hold my shares. I'm glad I bought into the position when the stock price was down, and I can just hold my shares and watch them rise. Thank you so much for watching my video. I really appreciate it. Please leave a comment. I really appreciate the comments that have been coming in on both Archer Daniels Midland. Let me know what you think of the company. Let me know what you think of these videos, good or bad. I'd love to hear from you. Keep in mind, everything that I share is for entertainment and educational purposes. I'm sharing my experience as an individual investor, but I'm not providing advice, financial advice. I'm not recommending you buy or sell ADM. Good luck investing in 2023.